This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. It's 124.22, show number 359. Monday morning pressure. Where is the PPT when you need them, Nick?
Well, they're not far away. I mean, they know what's going on. This market is, tumbling pretty nicely this morning, but it's having a pretty good rebound as we speak. The one thing I would say is that every investor now is waiting on the Federal Reserve, which is this Wednesday. They start a 2-day meeting tomorrow, the Federal Open Market Committee, that is. So we'll see how it all plays out. I have to think, though, that Powell and company will say something to try to get these markets to find some kind of a bottom here. So, right now, we're very, very oversold. Markets have been just tumbling throughout the month of January. No January effect in sight. So everybody's looking to Wednesday's Fed announcement, and they're going to see what the Fed can say to help lift stocks off the lows. But you never know. We'll see if there's a capitulation move here or a washout. The volume's getting pretty high, which suggests that we're getting closer.
All right. Well, hey, if you remember when we started off the year just 3 short weeks ago, 3.5, Nick gave the assurance that there wasn't going to be a January effect this year. And that's saying, so goes January, so goes the market. Well, if that's the case, we got a problem here, Lucy. Got a problem, Ricky. What are we going to do here? Right?
Well, we do. We have an issue. And again, you're going to get bounces in this kind of market, but they're not going to be, in my opinion, they won't be sustainable longer than a few weeks. So, again, it's a trader's market right now, and it's a very technical market at that. So you want to pay attention to the technicals. You want to pay attention to what the market is telling you on a daily basis. And that's ultimately how you can navigate through this type of trading year.
Yeah, well, agreed. And crazy stuff is bound to happen. We got a lot of geopolitical stuff taking place right now. China, Taiwan, Russia, Ukraine.
Yes, that's going to be, I think, pretty important going forward, because right now we haven't had any tightening going on in the U.S. when there's a geopolitical event happening. This is the first time in many, many years that the markets are actually in a potential tightening cycle, where the Fed is not going to print more money. They are talking about raising rates. Whether or not they do it will remain to be seen. But this is the first time we've seen such geopolitical tensions going on. And markets don't like that stuff. They don't like uncertainty. They don't like a chess match between the East versus the West. They don't like any of that stuff. So I think there's going to be a jittery market for a fair amount of 2022. But there'll be big bounces out here whenever you go into this prolonged bear. But geopolitical events are here, and there's a lot more out there between besides just the Russia, Ukraine, and China, Taiwan. Watch the Middle East as well. There's always an event that's ready to unfold there as well.
Yeah, well, when is the next equinox or the next?
We have to wait till March 21st.
All right, so we should be okay till then, right? We should be okay till then. Well, natural disasters, you can never account for them. Man-made natural disasters, like what we've been through, you can't account for that. So very uncertain world. Maybe Bitcoin is not the new gold, huh?
Well, Bitcoin now is a little bit out of favor, and we've been talking about Bitcoin for a while now, going back to early December, saying how this chart has really fallen apart and it's starting to look weaker. And really, the big tell was just a consolidation below that 200-day moving average. That's a telltale sign that it wanted to go down to 35,000. I was looking for a move below 35 slightly, and that's exactly where we are now. So Bitcoin has had a big fall, and you've been listening to the program, you are not surprised at all. It's exactly where we thought it would go. Yeah,
well, I just find it interesting because cryptos are supposed to be different. Every time I hear such and such asset class only goes up, I know it's getting time to sell. They say with real estate only goes up. And over time, that might be the case. The stock market always goes up, right? stock market always goes up, except when it goes down for a few years, and at which time it could go down a lot and you can really get cleaned out.
Well, the funny thing was when you look at Bitcoin, if you recall back in October, it was making a pretty good move, I believe a new high, and then it made a pullback, and then it made a nominal new high. And back then, even when that happened, a lot of people were saying 100,000. I said, well, let's get through 70 first and then watch for pattern. This is just a nominal new high. And then, you'll notice even in the same month of November, it cut back below its 20-day moving average. That's always a little bit of what we call a potential failure in the making, because you had a breakout suggestion, but you just couldn't break out. And if you don't do something that you should do in the market, it's very often the best moves come from failed moves. And that's exactly what this did. It failed, and then it consolidated, went lower, consolidated again, obviously on that 200 period moving average throughout the month of December. And, that told us the next downside target was going to be at 35,000. Remember, I put a warning out there. Everybody was wanting to buy that 40,000 level. I said 40,000 may hold for a few days, but I don't think it holds very long, just because that level is now minor. So it's very important for everybody to understand the charts. And it doesn't matter if you trade crypto or if you trade rocks. If you could chart it, you could probably make money. So again, this is, I don't even trade crypto. I was just giving my analysis just, to everybody out here that wanted to listen. And again, you don't always get it perfect, but when you see these patterns, they generally are pretty accurate.
So how low can it go is the question, Nick.
Well, you're at a big support level now at 33, 34,000. So and that level that we're at now coincides with the bottom that was made in 2021 in the month of July. And you remember back then it looked like it was going to break down, and it reversed and broke back out. So we know there's some stronger holders at this level. Now, should 29,000 level get taken out on a weekly close, I think Bitcoin could go down to 12,000. However, I think the level that we're at right now is probably going to hold for a bit. So it's not a bad level to trade off of right here. It's a pretty decent area, but you keep 29,000 on your watch now. And if you close below there, especially on a weekly close, then this is probably really broken, and the holders just can't hold it any longer, and it'll go down probably 12, 13,000.
Well, that's interesting, and I guess we're just going to have to see. That's what we were saying originally, and I think originally we said 17,000, then we said 12,000. We got lots of hate mail, and I guess we were just a little bit ahead, because then it retested its high and then sank like a stone.
Well, when you say those things, honestly, they get a lot of rise out of people, but there wasn't said to just go there. It was said if you break certain levels, you'll go there next. And that's how, that's the one thing I've learned in this business over the years, is that when you put out levels or anything like that, people just want to skip over, the fine print before you get to a number. So I see that a lot. I've seen that throughout my career. But, if you break certain levels, the only time I'll ever look at at a lower level or a higher level is when we exceed the prior. And I think that's how everybody needs to trade. I mean, if you don't trade like that, then you're just wishing and hoping, and, you're going to lose your money.
Yeah, hopium. There's nothing quite like that. Hey, gold and silver under a little pressure, but not a meaningful move here. Down a couple bucks last week. Gold last Friday. I guess silver's under the $24 range. What are you seeing here?
Yeah, so silver's under a little bit of pressure today. Gold is not bad. Gold is actually holding up pretty well as we speak. It's up $1.80. But when I look at silver today, not acting all that well. Silver on the futures are down 60 cents. That's about 2.5%. So silver's under some pressure for whatever reason today. I'm not really sure why, but gold is hanging in there pretty well. So when I look at the gold chart, gold is hanging in there pretty well. Looks like it could be basing for a move up into that 1853 level on gold futures. However, on silver futures, not the prettiest of moves today. So that probably tells me silver needs to do some more backing and filling. But the gold chart looks pretty decent. So those two are diverging a little bit today.
Yeah, that's always got to give you pause for thought. Well, that is it for today. Make sure you go over to Nick's site, inthemoneystocks.com. See how he's been beating the market indexes for decades now. The Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Your emails are welcome. Shoot them off to kl@kerrylutz.com. Nick, we will talk to you on Wednesday.
Sounds good, Kerry.